Hello and welcome into the KE Report. Shad and Corey here today as your host, and we're talking with our friend and colleague, Sean Brodrick. Sean is the editor of Wealth Megatrends and also a contributing analyst over at Weiss Ratings Daily. Has a couple different publications that we'll talk about throughout the course of this: Supercycle Investor, Wealth Megatrends, and also Resource Trader. And Sean, it's just always great to get you on the show to see what's on your mind as far as some of the macro movers, and then obviously we get down into individual sectors with you. We may move around a little bit in today's discussion, but just kicking it off, we've seen a little bit of clarity as far as the U.S. and the European Union are concerned as far as some of these tariffs. As a result, some of the tensions that were there that were keeping gold prices and silver prices higher have eased a little bit. I think it's nice to see some resolution, although I don't know how much resolution we're really going to get because the tariffs are still very much a moving target for a lot of these things, and sometimes just on a whim they can change. But what's your general takeaway from some of the news that we've had out of global trade and these tariffs?
Yeah, well, I mean, the news out of the tariffs was good. The first important piece of news is we aren't going to have a trade war with Europe. They are our largest trading partner. Most people think that's China. That's wrong, actually. Europe is our largest trading partner. And so also the US is going to still support Ukraine. That's the big concession I think that the Europeans wanted. And that's pretty much what they got. The US is going to impose a 15% tariff on most goods imported from Europe. Some sectors get the zero a tariff exemption. So the EU has agreed to purchase a lot of energy. We should talk about that. And the EU also said that it's going to invest about 600 billion in the US. Those last two I have problems with. And well, just starting with the fact the oil target seems impossible. Europe agreed to buy $750 billion of US energy over 3 years. But that means they'd have to triple what they bought last year. How are we actually going to ship all that to them? I don't really know. And then the other thing is the EU committed to investing 600 billion in the US economy, and that sounds great, except we just had the trade deal with like Japan that was announced, which was a $550 billion trade deal, and the US was supposed to get 90% of the profits. So only over this past weekend, this news always comes out over the weekend, turned out Japan agreed to only invest 1% of that 550 billion in the US. The remaining 99% will be in the form of a loan. So we've heard some things announced about the EU trade deal. Overall, it is positive, and I really like that Europe has agreed to buy more US energy, oil and natural gas, I'm sure, because they have to replace that Russian natural gas. So that's good. It's just that the devil is in the details, and we'll have to see what the details are. One thing we did see, and maybe we're going to talk about this next, or else we can talk it now, because that uncertainty about a potential trade war is off the table, that sent the US dollar up the most since May, and that sent gold just sliding downward, really took the wind out of gold sales. We are seeing gold bounce as you and I talk now. I think that what we saw yesterday was kind of a hiccup. I think there's still some long-term problems in place for the US dollar. And as we talk, this is again Tuesday, the US dollar was testing overhead resistance from June. But the big downtrend that has been in place for the US dollar all of this year has now broken. Now, is this just a fake out? Is the dollar going to go down again, or is the dollar really going to try and bounce here? I don't really know. And so that's one reason that I'm just content to watch the market for now.
Fair enough, Sean. These markets, they continue to melt higher. It does seem like investors are paying less attention to the tariffs, at least in a longer term sense. But let's get into individual sectors. You mentioned the precious metals. Gold hasn't really done much in now coming on 4 months. The gold stocks have slowed a lot of their momentum, but we saw a lot of that money rotate into some of the other precious metals sectors like silver and all the other precious metals, actually. But that's also started to slow a little bit. So, what's the next catalyst here for the precious metals if we are in this environment where I guess tariff fears seem to have dissipated and now people can focus on other things?
Right. Well, we do have the underlying catalyst, which is central bank buying. I mean, at least for me, that's a really important thing because that indicates not only that central banks want to own more gold, they now have more gold in their reserves than they have euros. That was a recent stat that came out. Just shows that they want to get away from the US dollar domination that really keeps them in place. I don't think China wants to be the world's reserve currency. I don't think the US is going away as the world's reserve currency, but the more tariffs we have in place, it's likely the less trade other countries will do with America. And the less trade they do with us, the less dollars they need. And so I still think that the big downtrend for the US dollar is in place. I mean, nothing moves in a straight line. We're seeing a good rally in it right now. So, we'll just have to see how this plays out. But as to what could be the next catalyst besides the dollar, besides central bank buying for gold, I mean, it could be a bunch of things. Retail really hasn't gone into this. And in fact, we've seen retail selling of gold ETFs and stuff, probably because, as you said, it's gone sideways for 4 months. And people can get bored. You really shouldn't turn your back on gold, because when people get bored and it gets sleepy, that's when the breakouts come. And I tend to look at a sideways movement of months as an energy band. It's going to break one way, either up or down. And to me, looking at all the catalysts that are in place, it's much more likely, gold is much more likely to break out to the upside.
Yeah, I think that's a great point, Sean, because the trend for the last few years has been to the upside. And so the odds are that trend continues. As the old saying goes, the trend is your friend. The other old saying, never sell a sideways market or a boring market. So we'll see how that develops. How about a catalyst of Q2 earnings coming in? Because we did see Newmont plow into, even more revenues and cash flows. It was kind of a monster quarter for them. But there's a lot of mid-tier gold producers and even some of the other lesser discussed seniors, and even some of the small producers for that matter, that are all going to be putting out what are probably going to be record revenue amounts. And with all that cash building up, the other question that plays into these Q2 earnings is, what do they do with that money? Share buybacks, dividends? What do you want to see? Do you want to see more M&A? So maybe just some thoughts on how Q2 earnings may play into it, because they're going to be a monster quarter for the gold stocks and even the silver stocks.
Well, we have Newmont in Wealth Megatrends, like, duh, of course you do. I mean, because it is the best large gold miner around. What I'd like to see the large gold miners buy up all the small gold miners that I've recommended to my subscribers. That would be my happy place. Am I going to see that? I don't know, but I am expecting great earnings news. That's why we have a bunch of gold positions, just because the chances for upside surprises is very good. And we're really seeing a bunch of well-managed companies. I'm trying to stay away from those companies that issue shares a lot, like stuff like that. And with this cash flow that they've been having recently, a gold producer shouldn't have to issue shares. And so that's one thing you should really be keeping an eye on, is who is doing what. But yeah, I mean, they should all be making bank this quarter, and I'm really looking forward to that.
Sean, what sort of reactions are you expecting, though? Newmont did pop on the back of their earnings. I think they're up 7% in the day, at least at one point. So the market did react to them. Do you think that the market will continue to react strongly to earnings that are going to be good?
Well, I think that really depends on the outlook among investors toward gold. Do they think gold has peaked? I think such a view would be wrong. But I mean, if they start to rotate away from gold to something else that's shiny, then maybe they won't be impressed that much by these reports from companies when their earnings come out. But again, it all depends on the company, doesn't it? I mean, it's not only important what they report on earnings, but their outlook, what they'll be spending money on, where they expect to make more money, stuff like that. So I'd really put it down to a individual stock by stock thing. I'm not actually looking for any broad reaction.
Yeah, it's interesting. I always ask people, do you think the earnings are already priced in? And everybody says, oh, yeah, they're already priced in. And then the stock will pop on the back of it, like Corey just mentioned, 7%. I guess it wasn't priced in then. Yeah, it wasn't. Now, what do you think about the silver stocks? Because a lot of the producers had quite a different quarter. I think it's even more noticeable for silver producers or people that have a heavy weighting to silver in their production mix, because it's gone up on a percentage basis more in Q2 than gold did. And in Q3, it's actually lifted even higher where gold trended sideways. Do you think that maybe silver stocks get a little bit, the producers in particular, get a little more of that influx just because they're going to be better on a percentage basis?
Well, I think so. That's why I own so many silver producers. I mean, but I might be talking my book. It seems like an obvious thing to own silver producers at this point. There are so few of them, and just the upside potential with the big move, the big percentage move we've seen in silver this year has just been or it should be very, very good for these companies. So yeah, that's exactly what I'm looking for.
Sean, how do you analyze this though? Because a lot of the silver stocks, they're up quite a bit. There are silver stocks that are double, some even triple what they were pretty much at the beginning of last quarter. So how do you do that analysis to understand if it is priced in or if there is still room to run to the upside after the quarter that's already happened?
Well, I mean, that's really a individual choice. I think they have room to the upside. That's why we still own them. I think silver's going much higher from here. I mean, I do think silver's going to $50 in the next year, but I believe that's just a signpost on the way to higher prices. I think silver's going much higher. So it all depends on your individual view of the market, doesn't it? I mean, some people are glad to take gains whenever, and I'm as guilty of that as much as anyone because you get beaten up enough when you finally have some gains, you just want to take those gains off the table. And then you watch the stock go higher and higher and higher. People have trouble believing that good things will happen to them, especially in precious metals. You get beaten up so much that when you get one that's finally winning, it's hard to believe that something won't go wrong, right? And so I think that a lot of investors will have that problem. They will sell too early. I will try not to be one of those people.
Man, that's so true, Sean. And after getting bloodied around and beaten down for so long, when stocks finally rally, the tendency is often to sell too early in a rally. And I mean, even in, like we mentioned, for Q3, silver is up substantially more than where it was in Q2. So it's actually had a trend that's in an upward trajectory, unlike gold that's kind of cooled its jets a little bit. Another metal that we often talk about with you, though, is copper. Copper has surged up a lot higher, but we haven't seen the same kind of reaction in copper producers that we saw in the gold and silver producers, even though it's up at record highs and as it maintained it. It wasn't just a one-day pop on the Trump tariff comment. It's actually stayed higher, but if you look at ETFs that hold the copper producers, or if you look at the copper juniors, they're still not really moving. So how are you analyzing the copper equities?
Yeah, we own a couple copper stocks already, and they did move up nicely, and then they gave back a bunch of those gains. I mean, we're still up, but we could have been up a lot more. It's kind of puzzling to me. I mean, is it the fact that investors don't believe in the global rally? I mean, we're seeing a lot of good things around the global economy. We're not seeing a lot of bad news, which means that there's going to be more copper use. I don't really understand that at this point. I'm sorry, I don't have an answer for you there, but my longer term belief is that the underlying fundamentals will prove out. And we see these statistics coming out about the global copper supply and demand and how much tighter it is getting. And I can't help but think that is going to lead to higher prices. Now, the tariffs probably have something to do with it, which sure, exactly, I don't know what. I mean, we have big tariffs coming in. We know there's been a race to get these shipments of copper into the US before the tariffs come in. Does that have an effect on the stocks? Probably in some way, but I'm not deep enough into those stocks to really know exactly how that has that effect.
So, Sean, I guess with copper, even with the precious metals we were just talking about, how do you like to play the equity side of things? Do you focus on the big guys, hoping that they show leadership, or do you think that there could be a risk-on type of environment that even helps lift the smallest of the stocks?
Well, in Wealth Megatrends, which is, that's my big newsletter that has the largest thing, we have Freeport McMoran. It's a big one. It's copper, gold, and has some good things going. In Resource Trader, we have Taseko, and it's looking great. And it's a much smaller company. It's only $1 billion market cap, even though it's gone from like 2 to 3 space of like 2 months, So part of this may be that they have had great gains and they have to digest those gains. That's just a normal part of any market. Maybe we're seeing that. But if you aren't in copper stocks yet, I would use this time as a buying opportunity. I do think they are going to get more expensive.
Well, Sean, I've been jonesing to talk to somebody about uranium stocks because over the last month or two, they've actually gone up. We've had a rebound in them. If you look at the ETF URA or if you look at URNM, you've seen a move higher in the uranium stocks. It's kind of been a stealth rally. Now, there were a lot of positives from the Trump executive orders earlier in the year, and there was a lot of positives for the space, but it kind of got lost in the shuffle as the precious metals and copper are rallying. But do you have any thoughts on uranium stocks having a stealth rally here?
You tell me. I mean, we had Energy Fuels and it was snoozing and was kind of going up a little bit, and then come along comes July and it blasts off. What changed in 1 month? I've been trying to figure this out, and I think a lot of it has to do with people anticipating more of a push from Washington D.C. for domestic supply, or at least North American supply. I mean, if you look at Cameco, that thing's been on an upward trend since actually the market bottomed in April. Cameco started to move higher and it never really looked back. It's just been going higher and higher and higher. I wish we had that one in there. We took gains a long time ago. So definitely the trend is your friend here, and the trend seems to be very, very good. And again, I'm looking at North American or Australian uranium producers that can maybe get advantaged by what goes on in like Washington, D.C., because they don't want to rely on the Russians for uranium, because at some point the Russians will screw us over just the same way that the Chinese did with like rare earths and antimony and stuff like that. So they are trying to get domestic supplies of uranium production going, and also friendly supplies, Canada, Australia, stuff like that. And I think that has to be one of the things moving things higher. I really can't explain it other than we've also seen a bid come into the spot market too, right? Not sure what that's about. Don't think, well, I don't really know. Maybe some utilities are like adding to their supply in the spot market, though that seems unlikely. They almost always do contract stuff. So it's interesting to see. I'm not sure why things are moving in my direction. I'm just glad they are.
In all honesty, though, Sean, it seems like we are getting more positive comments out of the government. And I even listened to some other podcasts that aren't resource focused. And they're even talking about not so much uranium, but just simply this build out of nuclear energy as well. And that's a
Yeah.
key there. So there is an investing option here. It is uranium stocks, but it's also the builders of these reactors or the utility companies. Are you interested in those rather than the uranium stocks, or how do you balance out that exposure?
Well, in Resource Trader, we also have Vistra Energy, which has that exposure. We also have a Dominion, which has that kind of exposure. So, yeah, I mean, one of the themes that I've been talking about to my subscribers is not only AI, but the hyperscalers and just the general electrification of everything is just going to drive energy demand in this country so much higher. In fact, I had a Weiss Ratings Daily column recently where I showed this chart, which came from one of the industry analysts, just showing how energy demand in this country could go like a hockey stick. I mean, not right now, but they have to plan these things years in advance, and they can see the demand coming, and it's going to be huge. And so that probably explains part of the uranium story. It certainly explains part of the nuclear story. And it explains what's happening with a lot of these utilities that have that exposure that can really do well on that. We are seeing the federal government turn away from wind, but it's really turning toward things like nuclear power. And so if you can find the right utilities that are leveraged to that, I think you can do pretty well.
Sean, are you surprised as someone that's followed the space as long as you have that people are just now waking up? Like it almost has to smack them across the face that, hey, there's just not enough electricity that's going to be generated that's 24/7 base load. And like we've known this forever, but it seems like last year was the year where people finally had the aha moment. Do you think that some of this has also been fed by both the Biden administration and the Trump administration has been more positive towards the mining sector, but especially around energy security? So nuclear's played into that. The Biden administration more favorable to renewables, Trump administration maybe not so much, but there's definitely been a focus on energy and power. Do you think that brings in resource investors through that doorway that maybe wouldn't go through the gold, silver, or precious metals narrative doorway, but maybe they come in through the doorway of EVs, charging stations, crypto minings, AI data centers, and oh my God, where's all the electricity going to come from?
Right. Well, maybe. I mean, I'm happy to have all those people buying these things as long as I have a chance to buy them first, right? Because I want my stocks to go higher. We are at a interesting time for the markets. And this is broadly speaking, though you can also talk about certain industries, but broadly speaking, the market has been trending higher for a while. The whole tariff fear that actually slowed things down, held things back, hurt things for a bit, but that seems to be passing. That cloud is passing. So a lot of the good things investors were looking for, which is new tax breaks for corporations and for investors as well. I mean, that's definitely putting a shine on investing as a whole. And I certainly think that people are starting to wake up to the real potential in like nuclear and electrification and all that. And so I still think we are going to have a great year. I mean, we're having a terrible day in the market as you and I talk. That's okay. Nothing goes up in a straight line. Things have to pull back. And that just means that you have a chance to buy things that maybe you should have bought the first time around. The underlying fundamentals for all this stuff is very, very good. And so that just makes me more bullish.
So, Sean, since you cover so many different markets, we have talked a lot about resources here. Where do you see some of the best opportunities right now for investors, whether it's resources or any of the other sectors you follow?
Well, the things that I've been steering my Supercycle investor subscribers toward is things like drones and rockets and stuff like that. There's some tremendous opportunity there. They've been having a terrible week, but we're still up on those positions because they've been doing so well. And I believe they'll do well going forward. We are seeing a change in warfare with drones that it's like a real fundamental change. It's like every time there's a war, I mean, there's some new technology that comes along that changes the battlefield. Drones seem to be doing that now, but not only drones, hypersonic rockets, because hypersonic rockets, which technically they travel faster than Mach 5, but we've seen some that can travel up to speeds of like Mach 13, Mach 15, I mean, they can hit before you know they're coming. And so the militaries of the world find those extremely attractive. America is lagging the race in hypersonics, which only means that the government's going to throw more money at certain stocks. And so that's kind of working out for us kind of well. And so I expect to be investing in that a lot more. One other thing that I would recommend, and we have talked about a lot of good things, all of which I'm invested in. One we haven't talked about is those companies that might be able to save hyperscalers and other large users of electricity money by reducing the amount of electricity they need. And I don't really want to talk about those names now because I'm still getting into them, but those are ones that I think have a really tremendous future because that's going to be the critical thing, not only for these companies that use so much electricity, but also for America as a whole, because we really can't supply as much as they're going to want if things stay the same. So the only way we can make it work is to become much more efficient at using the electricity we use. And those stocks that are involved in that, I think they could have a great future.
Yeah, I think those are great suggestions, Sean. And energy efficiency and energy conservation companies that go in and right size the power requirements of buildings or cities. There's a lot of opportunities there. And there's a couple companies in that space that are doing interesting things that maybe we can get into at a future date. Just one last comment, just in a general sense on the markets. When you look at the general U.S. stock indexes, especially the weighted averages, they've just been screaming to new highs over and over again, even the last month or two. And you've seen a return of retail investors piling into new meme stocks and spiking the punch bowl and a lot of defunct companies. So it's interesting to see that. But you're also seeing, rallies in cryptocurrencies, rallies in commodities. It seems like everywhere you look, there's been a rally. Is retail just in such a risk-on mode now that they've almost forgotten about the world ending a couple months ago? Or are you worried at all that on August 1st, when we have some of these other tariffs to negotiate, that maybe, there's still a surprise that could pull the rug out from underneath people? Because it seems like people are all bulled up no matter where you look.
Right. Well, I'm not going to tell retail they're wrong because so far they've been tremendously right when the big money has been wrong. I mean, that's at least what we've seen since April. And we continue to see that, as a matter of fact. There's still a lot of selling going on by some big institutions, whereas the retailer just comes in and like snaps it up. And the meme stocks and stuff like that. I mean, I just cringe when I see people doing that, and yet they seem to be doing fine. And outside of things like Bitcoin, there are some stupid cryptocurrencies out there. I mean, they look stupid to me. They don't look stupid to the people at like Weiss Ratings who actually deal in these things, write about these things. They seem to like them. And sure enough, they're doing well. So obviously, I'm an old man who has no idea what I'm talking about. That's basically what I'm saying, right? But one thing that, the bulls should keep in mind, and I count myself among the bulls, but this is one of the things I think about, is the more expensive things get, then the more they have to justify that price. And so things have to go more and more right. Otherwise, there has to be some kind of correction just to bring them down to an area where it makes sense. So enjoy the bull run. I'm certainly enjoying it. But just remember that a correction could come at any time, and it could be precipitated by news that shouldn't be that big of a deal. But in a market that's priced for perfection, it can turn into a big deal.
Yeah, I think that's a great way to wrap it up for today. And some sound advice there, Sean, is nobody's thinking bear market when it's bull market, when it's good times and everybody's high-fiving each other. Savvy investors always have one eye on the door on the exit plan, just in case they need to pull some profits. So good to have a strategy for the surprises that are inevitably going to come, and the corrections that are going to cool things down and bring things back down to earth, and gravity will set in once again. But a lot of great ideas you threw out here today in the show. And for those of you listening in, if you want to follow along with some of the trading ideas that Sean covers in his various publications, definitely click on the link below in the show notes. It takes you over to Weiss Ratings, and you can see links to Supercycle Investor, Wealth Megatrends, and Resource Trader. Sean, always great having you on the KE Report. And as always,
go
ahead.
If I could, August 5th, I'll be doing a live webinar presentation for the Money Show. And so I'm sure people can search around on the internets and find that. And that is going to be about investing in defense stocks, not just the big names, but some small names too. So people might want to tune in for that.
Fantastic. So if you can send me the link, I'll put that below in the show notes as well, Sean. And we just had on Mike Larson from The Money Show, and we just were talking about the benefits of being at those. So you can attend virtually and see Sean's talk. And looking forward, as always, to our next conversation.
Thanks.